This video is for educational purposes only and should not be considered financial advice. Easy ICT Session Equilibrium Strategy. In this video, we will be covering a strategy to trade the ICT time-based liquidity model around session equilibrium. Session equilibrium. When we say session equilibrium, all that we are referring to is the midpoint of the various kill zones. After a lot of backtesting, we have found that these are very sensitive areas for price to react from. There are also very strong draws on liquidity. ICT mainly focused in his teachings on the Asian range as a way to predict price movement. However, the ranges of the other trading sessions also give important information on the direction of price. We touched upon this in our previous video, but just to refresh the concept, let's take a look at an example. Here we have the S&P 500. It is on a downward trend during all of the sessions in this day. And if we look and map out each session's midpoint, we can see the equilibrium happens here in the pre-New York, and during this New York session, price hovers above this equilibrium and then breaks through, retraces, and then moves downward. During the lunch hour, we see another range created, also with another equilibrium, a 50% midpoint level. We see during the afternoon session, during New York, price goes above that equilibrium and then moves past it. It then retraces one more time and then moves to the downside. During the Asian session, this midpoint is created, and during London, price moves lower and creates another midpoint. During the pre-New York session, price reaches towards this midpoint during Asia, but does not quite touch it. It then moves down past the equilibrium session of London, continues during the lunch hour around that midpoint of the London session. Then during the afternoon session, price reaches up and touches that Asian session mid-range. It retraces back to where? To the mid-range or equilibrium point of the New York session. Then it shoots up past this session equilibrium all the way up to the New York of the previous day. Then it retraces all the way back down to the mid-range of the lunch hour. As you can see, these session equilibriums are very strong draws on liquidity and also rejection levels. The ICT session equilibrium strategy. Here's the strategy to take advantage of price movement from the session equilibrium point. 15 minutes before your chosen trading session, draw out the high and the low of the previous session and mark the 50% level of that session. When price opens in the next session, and once liquidity is taken from one side, wait for price to reach the equilibrium point. Once this occurs, wait for price to show a willingness to move in your direction by crossing the Tenkansen line from the Ichimoku indicator. Enter when the candle closes beyond the Tenkansen line. Use the Ichimoku line or the most recent swing level as your stop loss. Aim for a 2-to-1 take profit, but you can trail your stop with the Ichimoku line. Let's take a look at some examples on the charts. Here we have the NASDAQ during the New York session. During the pre-New York session, we drew out the high and the low. We also put our midpoint of that session as the 50% session equilibrium. Liquidity was taken right before 11 o'clock as price moved above the 50% level. Then price closed below the Tenkansen line, the blue line of the Ichimoku indicator. Once that occurs, that is your entry. You set your stop loss above the recent high or the recent swing level. As we see, the Ichimoku line is below, so we can't use that as a stop loss. We set our take profit to 2-to-1, or we can use this order block as a termination point, and that is a 2-to-1. In this example, we see again during the pre-New York hours, there is a range created. We set our equilibrium level, and as price moves above that equilibrium level, we're looking for a retracement to enter from. Price retraces to take liquidity of these equal lows right here. It taps into an order block. Then it crosses above the Tenkansen line. It also crosses above the Ichimoku line. That is your entry. You can put your stop loss below the swing level here, and then you see price takes off to the upside. And we're targeting 2 to 1. You get more than that, but we're looking to go above this level to take liquidity. In this example, we're looking at the afternoon session. This was the trade we just looked at. During the lunch hour, we have a range created, and we drew our 50% level. Price moved above that level. It took liquidity. Then it crossed right back below and crossed below the Tenkansen line. It also tapped into this order block. That gave us a lot of confluence to frame our trade around. Once price crossed the Tenkansen line, we entered. We put a stop above the swing high. Again, the Ichimoku line is not above, so we have to use the swing level as our stop loss. Our take profit is 2 to 1 as we're looking to take out this liquidity. In this last example, we're going to show you how the session equilibrium level is a draw on liquidity. This is an afternoon session, and we look at our lunch hour and the range that was created. We drew out 50%, and then we see a large move to the downside during the afternoon session. Price comes back above the Tenkansen line, also the Ichimoku line, and then we're looking to see if price is going to go back downwards or continue to the upside. And these are the clues that will tell you. If you count from here, you'll see that this is a level 3 market maker model. This move down here is a liquidity grab from this level 3. Once price breaks structure and creates another swing level, this is a level 1. Then we have a level 2 created, and price moves into this order block that was just created once price closed above it. Then it retraced and closed above the Tenkansen line. That is your entry. Price moves towards the session equilibrium, and we're going to use our Ichimoku line as our trailing stop. And you see it doesn't even come close to it, and we reach our 2 to 1. To recap, using the equilibrium level of previous sessions to frame your trades around can make for really accurate entries and low drawdown. Using the Tenkansen line from the Ichimoku indicator along with the equilibrium level as an entry point will increase your win rate even further. If you found this video helpful, please like and subscribe for more videos like these. Also, please leave a comment if you have any questions or if you have any other video suggestions. Thank you for watching.